Hello, you're watching The Big Picture on News.Markets. Regulation in the global banking industry has increased a huge amount since the global financial crisis, as regulators and central banks try to ensure that there can be no repeat of events on financial markets in 2008. Hank Uberoy is the CEO of cloud-based alternative payments network Earthport, and he joined me now. Now, from your perspective as the boss of an international payments company who deals with scores of countries and scores of different currencies and financial transactions every day, has banking gone too far? Is there too much regulation?
Well, I think the regulation is certainly quite demanding and is putting significant constraints on the banking industry. But it comes from a particular perspective. One of the things that's happening is it's having impacts which I don't think are intended in terms of banks withdrawing capabilities and offering certain service to certain segments of the population. That's clearly not the intention. So the challenge is, how do you actually address it? Regulations are not going to go away. The way it's going to happen is banks have to basically be able to address the regulations without every bank having to do everything by themselves.
So where would you come in, for example?
So if you think about it, a good analogy is to think about what a bank is. A bank is one of the last available remaining industries which is completely vertically integrated. A typical bank has between 20 and 30 platforms, hundreds of different departments. It's the byproduct of 3, 4, 5, 10 mergers, and their ability to make changes across the core infrastructure is almost impossible.
So it's already really complicated.
It's very complicated, and then regulation takes up all the spare capacity. So people ask, are banks doomed for failure, and will the new fintech companies come and take over? And the answer is not necessarily. What the banks have to do is what every other industry has already done, which is start to assemble best-of-breed solutions. I mean, if you take an example from another industry, the car industry. When you buy a car, you buy a BMW or a Toyota, you don't really care or know that there are hundreds of OEMs involved in producing the parts. A typical car company doesn't produce its own air conditioners, doesn't produce the tires, doesn't produce most of the components. But they do own the brand, they own the design, they own the customer experience, and they own the economic model. And the rest of it, they assemble best-of-breed solutions. So banks have to do the same thing in order to deal with the complexity. If they assemble best-of-breed solutions, then as things change and a better product comes available, they can throw out the old product and introduce a new product. And the regulators are starting to see that. And my guess is the regulators will start encouraging banks to use this approach.
Because already the payments industry is rather regulated, isn't it? It's heavily regulated. It's also quite risk averse. I mean, you say that you want to become faster and cheaper and more efficient. In the current framework, is it possible to be nimble, or as nimble as you'd like to be?
Well, it is not only possible, we've actually proven it. So when we first started off going into this space, it looked like a very daunting task, a small company platform trying to deal with a highly regulated, risk-averse, deeply complex environment. But you fast forward to today, and our clients already include the largest and most sophisticated players in the banking world. HSBC, Standard Chartered, Bank of America, Santander, they're all clients of ours. And the reason they're doing it is because they find our solution, while it's incredibly disruptive, it changes the way cross-border payments work by introducing a new model. It's not competitive. We're offering it on a partnership model, and we're finding that not only are the banks coming to us and talking to us, we're having very active engagement with many regulators around the world. 2 weeks ago, we presented in Basel for the Bank of International Settlements at the annual meeting of the CPMI, the Committee for Payments and Market Infrastructure. There were 28 central banks and several regulators out there, and we were invited to sit on a panel, the only company that was invited, to sit on a panel to address payments, innovation and disruption in payments.
But it's interesting you mentioned the Bank of International Settlements, because you're overseen by them, aren't you? But who regulates you?
Yeah, so we're regulated by the FCA as a payments institution.
But they regulate you?
They
so they're properly
us.
Scrutinizing
Correct,
you?
Absolutely. We're a regulated institution, and we have all the roles and responsibilities of a regulated institution.
So for investors out there they're looking to get into this market, into the payments industry, should they be daunted by the amount of regulation that's out there, or where would they see opportunity?
I think that's a very good question. If you look back 3 years ago, that was a real risk. Regulation was a real risk. We're a small company trying to deal in a highly complex regulated field working with banks, whether we'd ever get accepted or not. If you fast forward to today, we've actually been accepted. The largest and most sophisticated players are using us. And they're using us because while we're incredibly disruptive, we're not competitive. And we work within the existing framework of the regulations, and we run on the existing rails. So we are offering a solution that basically solves a problem that's existing today.
So look out for disruptive
but not competitive.
Not competitive ones. Thanks ever so much, Hank
Thank you.
Roy. It's been a pleasure talking to you.
Thank you.